Welcome to Insured Investors, where we share practical real estate investing tips with an insurance twist. I'm your host, Brooke Beats. Let's get started. It's no secret that insurance policies are complex, and it can be daunting to read pages of unfamiliar terminology. But just because it's daunting, it doesn't mean you should push it under the rug until a loss occurs, because by that time, it may be too late. Today, our return guest, Zach Baker, is simplifying property insurance policies. That way, you're armed with the knowledge to tailor your coverage to your exact needs, and you'll know what you are and are not covered for before a loss occurs. Zach holds 18 years of insurance experience and is the Director of Client Experience at National Real Estate Insurance Group. He heads the team that acts as the liaison between the client and the insurance carrier during the claims process. That is a tongue twister. Welcome back, Zach. Nice to have you.
Yeah, thanks. We had so much fun last time.
We did.
We had to do it again.
Yes. Okay, so today, talking about policies, talking about the framework of it, what people should be looking for, and how they should interpret it.
Yeah.
Where do you want to start?
So I think the first thing is just how important it is to know your policy. So the insurance industry is written in a kind of standard way that makes sense for most people. But it doesn't make sense for everyone, and it doesn't fit everyone's needs. So this is really all about understand your policy, what it does for you, what it doesn't do for you, so that you can become empowered to make sure that it fits your needs. So you don't ever want to make an assumption that the product you've purchased is fully comprehensive. You need to take that responsibility on yourself, understand your coverages and what it's doing for you, and then you can take the power back to yourself to make sure that it fits what your needs are, not what the general industry needs are, because everyone's different. So That's the point.
So we're going to kind of pull this apart a little bit and break it down and help people understand the best way to review it.
Mm-hmm.
What are the most important sections of the policy?
I mean, all of them, technically. But I do understand that it's a complex document. There's a lot to it, which is kind of what you talked about at the beginning. So we'll talk about a few of the most important places that you want to be familiar and comfortable with. The place I would recommend everyone start is the declarations page. It's called that sometimes it's called an evidence of insurance, proof of coverage. There's different names for it. What they all do is they're all a high-level recap of the coverages you purchased. It'll have the property address, the coverage limits, the coverages you've purchased, what your deductibles are. Some of them will include the valuation method and other things, and it's a really helpful recap of what you've purchased and what coverages are in place. So you want to be familiar with that first and foremost to make sure that it meets what your needs are. Especially if you haven't changed it in a long time. Because the reality is what you set whenever you first set the policy is likely what's still in place, and that may or may not fit what your current needs are. So you always want to make sure you're reviewing that, have a good sense of what coverage you've already purchased, and make changes from there. So that's the place you want to start.
Okay.
That's the kind of overview. And then in the body of the policy itself, there's a few important places. The covered property is a good one, covered cause of loss. There's endorsements and conditions. They all do different things in the policy, and that's all within the pages and pages of language that are there. We can talk about those in more detail.
Okay. One thing that they will sometimes see on a deck page are sublimits.
Mm-hmm.
Can you talk about those a little bit?
Yeah, so the overall limits are the maximum amount that the policy will pay for a loss. Sublimits are usually either property specific or peril specific, and they're designed to help limit the exposure and keep insurance as affordable as possible. Some common ones are theft and vandalism sublimits a lot of times. There's limits for jewelry and cash and trees and tree removal, and it just depends on the policy. They all have them, but it really is to limit exposure, keep insurance affordable, and it's just important to know which ones exist and what your limits are from a sublimit perspective, because you don't want to be self-insuring the amount over the sublimit unintentionally or unexpectedly. So the loss may be covered, but if it's limited, you still may have some exposure, and it's important to know what that exposure might be.
Okay, great. So let's go through some of the additional sections that people should be looking out for.
Yeah, so the first place I would look is the covered property. That's the property that's within scope of that particular policy.
Okay.
Whether it's a home policy, does it include contents? Does it include other structures? If you've got a service lines policy, what service lines are covered, equipment breakdown, what equipment's covered. Every policy will tell you what property is specifically covered within that product. And the key is just to make sure that you understand, is your property, does it fit the definition of that policy, and does it fit within the scope of that product? So that's the first place I would start, is what property is covered. And then I would also look at your covered causes of loss, and that defines what perils are covered and when are they covered. And I think we'll talk a little bit about the different forms and types of coverage you can purchase. There's endorsements, like I mentioned, there's conditions, and they all make adjustments to the policy and the responsibilities of the insured. So, but covered property and covered cause of loss are the two big ones that you want to become familiar with first, if nothing else.
Okay. Let's move into endorsements. What does that section look like, and what can it tell the insured?
So the property policies are just contracts that are written, and endorsements just tailor that product either to an individual person or to an individual insurance company. They just modify the base policy in some way. They add coverage, they remove coverage, they modify it. Some policies have an endorsement that removes cosmetic hail damage to roofs and siding. Some policies have an endorsement that will adjust how tree removal or debris removal may be handled. And so again, it's just a modification to the base policy. You want to be familiar and comfortable with endorsements because they change coverage. But that's all they're doing at a high level, is they're just modifying the base policy in some way.
Okay. Let's move into exclusions.
Yeah. So exclusions are the removals of coverage on a policy. So back when we were talking about covered cause of loss, there's really two primary types of covered cause of loss forms you can purchase. There's a more basic named peril form, which is a specific list of perils that are covered. If what happens to the property doesn't fit that list of named perils, it's likely not going to be covered. Then you have more comprehensive or special form type products that are what they call open perils. So the cause of loss is covered unless it's excluded in the policy. So that's what the exclusions do, is they will remove coverage, usually for those open peril or special form type products.
Okay.
And they're usually looking to remove either exposures that are too big for an insurance company to cover, like nuclear damage or earthquake, things like that.
Yep.
Or they're looking to remove coverage for things that really are within the responsibility of the homeowner. Maintenance stuff, damage over time, mold, like things that progress over a period of time that are really within scope of just routine maintenance on a home. Insurance policies aren't designed to cover that.
Yep.
So exclusions will usually fall into one of those two categories. Either so large they shouldn't cover it, or it's more the responsibility of the homeowner.
Okay. Because as we know, insurance policies are not maintenance plans.
They are not at all.
Okay, what are policy conditions?
So that is just the responsibilities of the insured to keep the contract valid. So again, insurance is a contract between the carrier and the insured, and there's responsibilities of the insured to maintain the validity of that contract. So some of the common ones are you can't materially misrep, you can't lie on an application or in a claim. You have to make the property available to be inspected by the insurance company. They have to be able to look at it and see how much damage there is. So things like that, they're just responsibilities of the insured, either to make sure the claim is covered or that the policy is valid. But it's important to know what actions you as the insured are responsible for to make sure that the coverage is valid. You don't want to unintentionally do something like complete all of the repairs. The insurance company has no chance to look at it. You might invalidate your claim, so it's important to know what conditions exist so you don't unintentionally hurt your chances of getting coverage in a claim.
Okay. Great. So all of these sections, we can call them, come with the policy no matter what. Essentially.
Yeah.
But how can an insured make the policy their own?
Yeah, so like I kind of mentioned at the beginning, the policies are written for the majority of people, so they're going to meet the needs of most people, and they're written in a pretty standard way. There's some flexibility, though, to make it your own. One of the big ones is the valuation method that you can select. That's all about how the claim is paid, whether it's replacement cost or actual cash value. The difference between the two is the depreciation recoverable or not if you complete the repairs. The other one that you can make adjustments to is the deductible. How much of the loss do you want to self-insure, and do you want to have a low deductible where the insurance company gets involved sooner, or do you want to have a higher deductible where you will self-absorb a larger loss before you even get them involved? The other big one is just the cause of loss form that we talked about, a more basic named peril form or a more comprehensive special form. One provides more comprehensive coverage and it comes at a higher price, but those are ways that you can make adjustments to the base policy to make it fit your needs. The other way you can do it outside of just the individual policy is you have ancillary products. You can purchase potentially flood coverage, or you can buy a service line like I mentioned, or equipment breakdown. Those are ways you can tailor your coverage profile to meet your needs outside of just the standard property policy. There's other products you can buy that will help you build whatever level of comprehensive coverage you want. So there's some tailoring you can do with different products outside of the base property policy.
Okay. Is there anything else we should know about policies?
I mean, that's really at a high level. If you understand what property is covered and you understand for what causes of loss, you feel comfortable with replacement costs or actual cash value and your deductible, you're already ahead of most people. You have a good understanding for yourself. It's really about risk transfer. Mm-hmm. What risk are you keeping for yourself? What risk are you transferring to the insurance company? I think we all, to a degree, rely on experts in the industries, which is pretty normal. But I would say, again, from an empowerment standpoint, you want to know what risk you're transferring. Make those decisions for yourself, because you don't want to leave that up to somebody else to make those choices for you. You want to tailor your insurance coverage to meet your needs, and everyone's different. So it really is about empower yourself, understand what risk you're keeping, understand what risk you're transferring, and that will give you a lot more confidence as you move forward, and that you have the best protection you can for your properties.
And it's good to know in the event of a claim, right? Because if something happens, you don't want to be caught not knowing what it is that you're insured for and then scrambling.
Yep. Yeah, and most people, if they're frustrated when they have a claim, is because they had a misunderstanding of what risk they had transferred and what risk they had retained. And that's why it's really important to have a good understanding, so you're not caught off guard where you have to scramble and come up with money suddenly to cover a loss that you thought you had transferred that risk to the company, but you actually hadn't.
Exactly.
Yep.
Okay, so I think it's time to play a game.
Okay, let's do it.
All right, so we're going to see if you can guess the top 5 most common property claims. So these calculations are from Insurance Information Institute, based on the data for homeowners insurance claims from 2017 to 2021.
Okay.
They do not include add-on coverages like flood.
Okay.
Okay. So, you want to do number 1 or number 5?
Oh, so number 1.
Or you can just list.
Okay.
Just list whatever you think.
My guess is number 1, gotta be wind and hail.
And why do you think that?
Because they are happening all the time.
Yes.
Those storms are happening all the time.
And it's windy out.
We had one last night here in Kansas City.
Okay. Number 2 or another one?
Number 2, I'm going with fire.
Fire is number 3.
Is it water?
Water is number 2. Yes.
All the pipe freeze that we had and all that stuff. Yeah.
Yes.
Yep.
Number 4.
So fire's 3. 4's gotta be... Oh, man. Is it like a sewer and backhoe?
Mm-hmm.
Theft.
Yes.
Yeah.
Darn burglars.
Breaking in and taking stuff. Number 5. Oh, man. That's gotta... I don't know. I'm drawing a blank now. Vehicles, trees. There's probably an obvious one that's not coming to mind.
Maybe switch your mindset away from property.
Liability?
Yeah.
For instance, yeah.
So lawsuits for bodily injury or or damage.
Yeah.
Yes.
I gotcha.
Yeah.
That makes sense.
Mm-hmm.
That happens a lot too.
Unfortunately, it does happen a lot.
Yep.
That's all we got for today.
That's awesome.
Anything else you want to say about policies?
No, I'm weird. I like them. I like contract language. I should have been, I don't know. It's like you're an attorney, you're kind of treasure hunt. You're trying to figure out, is it covered, is it not? So I'm weird. I think they're a lot of fun. So, yeah.
So read your policies, people.
Yeah, exactly.
Thank you for joining us today. Okay.
Appreciate it.
We'll continue to post new episodes every other Wednesday on NREIG's YouTube channel, that's NREIG, and on Spotify and Apple Podcasts at Insured Investors. You can also follow NREIG on Facebook and LinkedIn. See you later!